Thank you so much. I have no doubt I will not be as inspiring as those have come before me, but I'm going to try not to be too boring anyway. And I don't have any slides. So here we go. Perfect. So look, really delighted to be here. My name is Crawley-Moore. I work as part of the primary markets team at the LSE, and I have a regional remit that covers the whole of the Southwest and into the Southeast. And what that means in practice on the ground is that I spend a lot of time speaking to private companies at all different stages of growth about public markets and indeed their kind of broader fundraising ambitions and challenges. We have been doing this at the LSE for over 300 years, connecting companies with capital. And the London Exchange is very, very good at doing that for companies at all stages. We are home to the world's most successful growth market in AIM, all the way up to the FTSE 100. And despite what you might have read in the press over the last week even, but the last 12 to 18 months have been really challenging, and beyond that, the last 2 years has been an incredibly difficult environment for capital markets, not just in the UK, but globally. We go into this year feeling a lot more positive. We remain number one market in Europe, and we have done actually all of this year. The number to really focus on that's of interest on this slide is this 11 billion number. This is the total amount of money raised across the London Stock Exchange markets so far this year. We've had about 8 IPOs, and the rest of that money raised is through further issues. So that's companies coming back to the market to finance other projects as they continue their time on market. That doesn't include the massive 7 billion rights issue that National Grid are hoping to do later this month. We're still the 5th largest stock exchange in the world, only behind those markets in the US and India, which is seeing a real resurgence in its domestic market. This is what the LSE, although we cut off a bit on the left there, not all that's happened with the slide, looks like in the Southwest. And look, it's a really strong region. It's well represented across our markets. 53 companies from across the Southwest, so that's both main market and AIM, and it's actually the second largest region, UK region on our markets. Since 2018, 11 IPOs, 6 on AIM, 5 on the main market, and £1.3 billion raised. And I spend a lot of my time here in Bristol, in Exeter. I was in Cornwall last week. I'm in Bournemouth next week. And there's no question in my mind that this is a really vibrant region for building a business and for entrepreneurialism in all its forms. Which is why it's really exciting for me to be here today and to have already listened to some fantastic stories this morning. We would love to see more of those companies come and join the London markets in time when it is the right time for them to do so. Increasingly, I'm going to leave this slide up and we're going to have a broader conversation about some of these things. But we are, obviously, everyone knows the London Stock Exchange for our public markets. We actually have had 2 IPOs in the last couple of weeks. We had a Raspberry Pi IPO last week on our main market. That's a fantastic UK growth tech story, born out of Cambridge University, manufacturing in Wales, and their share price was up over 40% on their first day of trading. It's a really wonderful story, and we were really delighted to welcome them after what has been a very quiet period for markets. And then just yesterday, a US healthcare firm called AOT listed on AIM. That was the biggest AIM IPO of the year. So we're feeling much more positive going into this year than perhaps we might have done over the last 18 months. But whilst the markets have been quieter, and we've certainly been facing some challenges, we have not stood idle. And there's plenty of activity been happening around how we can improve the fundraising environment for companies in the UK and how we can improve the broader capital markets space in London. And one of the things which I'm going to focus on today, which feels like it's most relevant for the audience here, is what we're doing in what we call the funding continuum. So that's everywhere from startup, scale up, and all the way up to larger firms. The UK has one of the best startup environments in the world. Actually, we have world-class universities. You know that. here in Bristol, but that's true up and down the UK. We have a very good structure for supporting those businesses, particularly in the Southwest. I see that. But there are undoubtedly some challenges for companies as they go through that growth stage, and access to funding is one of those challenges. And so we're doing a variety of things in that space to try and help companies through their private life as well as into public. And this is a quote from our own CEO, Julia Hoggett. And we are genuinely becoming indifferent as to whether a company remains private or whether it is public. We are still providing them with access to funding as they grow, but also other facilities to enable those companies to grow. This is part of a raft of reforms and reviews that's happening across the UK capital markets landscape that includes everything from changes to the listing rules, which we'll see come to the fore this year. We've got the Capital Markets Task Force, which is headed by Julia Hoggett, which includes representatives from across the spectrum, both public and private markets, which is looking at everything from executive pay, research provision, corporate governance, allocation of pension funds, how companies are really accessing capital in the UK. And this is a piece of that puzzle. And very happy to talk about any of the other pieces of that puzzle if anyone has any questions. But more broadly, we are happy to speak to companies at any stage, whether you're a startup or a scale up, or you're larger, and we're really happy to have a conversation. And it's never too early to do that. And I don't mind at what stage the business is. I'm always really happy to have a conversation.
Talk us through the process, what it's like for maybe some businesses here in some years to come. What is that process, the lead up, the work, etc.?
Yeah. And I'll try not to stay on the stage for an hour because I'm sure I could talk about this till I'm blue in the face. But I think, fundamentally, if you are, a reasonable sized business, the first thing that people think about when they think about looking at an IPO, and they might be at a point where maybe you've got sort of three options on the table. You might be looking at a trade sale if you're looking for an exit. You might be looking at a private equity deal, and you might be looking at an IPO. And for an IPO, your fundamental driver has got to be about access to capital. And if you are an ambitious growth business, and not just access to capital at the point you join the market, but ongoing access to capital. So we see businesses come to market and will continue to fundraise over a long period of time.
May I just make the point that IPO, for those of you know what it means, but the actual literal is initial public offering. So yes. The word initial, I think, is relevant to that.
Yes, quite, exactly. So access to money is, this, and my sort of starting slide outlines that. It's connecting companies with cash and a set of investors. And of course, there are lots of nuances to that. Public markets can provide you with profile, credibility. We have conversations with lots of businesses, even the likes of, who were we talking to the other day, Trustpilot. It's a well-known brand. Everybody knows who they are. And they sort of said, well, look, actually, the listing's been great for us because we've onboarded better talent. We're doing it's much easier for us to engage with suppliers. And that's all because we're now a public business. So it's really interesting to see the kind of less tangible benefits, perhaps, to being a public business.
And if I could just echo that from my own experience with Future, taking that through its IPO in 99, ages back, exactly that. It raises profile, it opens up other relationships you're not even aware of necessarily, but frankly it also gives credibility to an emergent business which some larger players simply won't know about, however much love, how much great success there's been. Talk us through the actual process, though. So here we have a chief exec, a founder,
yep.
Whatever. What does it look like?
So most companies, if they're thinking about IPO, we usually say 12 to 18 months runway out. Now, if your business was in perfect condition and you had all of your ducks in a row and you had your board in place and your executive team and you had your advisors chosen, you could probably do it in 3 months, but we wouldn't advise it for your mental health apart from anything else.
Ours was 3 months, by the way. To interrupt at this point, yeah. You're right on mental health.
No judgment. Yeah. But generally, companies will be looking at this process for 12 to 18 months. And what is involved in that 12 to 18 months runway is really getting the business to a point where it is IPO-able. That means you need a board in place. It needs to be the right board. You would also spend that time, particularly in the UK, they don't do this so much in the US, but doing what we would call early look meetings. So you would work with your advisors and your bank to get in front of investors early. And they will give you feedback and say, this sounds great, but actually maybe this needs tweaking before you think about coming to market. Have you done all your due diligence? Are all your back-end processes well documented and in good shape? Have you got a good finance function? Your CFO or your finance director as a business is absolutely key as part of your IPO execution, and it's a real heavy lift from them. I think the other thing that we hear a lot for CEOs is that, running an IPO, it's hard work. It takes a lot of time, and you've got to run your business as well. And not only have you got to run your business, but you've got to deliver on the things you're telling investors you're going to deliver on, and you've got to continue to grow the business during that time. And that's true, of course, of any transaction. But if you were preparing for either of those other options, your trade sale or your PE, a lot of those fundamental processes are the same if you're preparing for any sort of transaction. The other kind of key part of that whole process is your advisor set. And you'll hear from some fantastic advisors, I'm sure, over the next 2 days. I know Burgess Salmon is speaking tomorrow, and you've got some others in the mix as well. But they are really key to preparing the business. You'll need to be working with an investment bank for public markets. You'll need an accountant, you'll need a lawyer, and all of these pieces of the puzzle will help you execute that transaction.
Yeah, just a couple of things here. One, you mentioned Burgess Salmon. They were actually the advisors on the piece that got away just yesterday.
AOT.
AOT.
Yeah, so really cool US healthcare business. Which was the largest IPO on AIM so far this year, and I think they were trading up on issue as well. So really delighted.
So it's another example of how Burgess Salmon obviously is now a much larger than just Southwest business, but how Southwest related businesses play a part on a national scale through the LSE. Yeah. I want to. The other piece I was going to say, for those of you thinking about that process, as Lauren has just outlined, it is an extraordinary piece of self-diagnostic. It's like being your own advisors or your own sort of Boston consulting group, whatever. You have to delve right into your business and make sure it's completely robust. That of itself has great value. You've talked quite a bit about perhaps larger scale companies, those potentially seeking IPOs. Let's come to all different forms of funding. That quote from your boss, Julia Hoggett, seems significant, that the LSE is not just about public markets. Tell us more. What are the types of offerings? How might they work? Why might companies here think of engaging with you in the LSE?
Yeah. So look, the background to this really is that if we want more great companies to IPO and list and stay in London and grow their business in the UK, then the rest of the funding ecosystem has to work. You need to be able to get your startup to scale. You need to get it into later stage scale up, and you need to be able to grow it. And in order to be able to do that, you need access to funding throughout that journey. And we feel really passionately about that. We're doing two things in this space that are interesting. The first is, and look, let's be clear, I've worked at the LSE for 20 years. This is groundbreaking stuff. This is completely different conversation that I might have even myself had with a company 3 years ago. So we're doing two things. The first is we have a partnership with a company called Flow, which in and of itself is a sort of startup scale-up fintech business. Really cool piece of tech. That's a digital platform that is enabling seed to Series A, maybe early stage Series B rounds for private businesses. So you've got businesses on one side of the platform, and on the other side of the platform is what we're calling a sophisticated investor base. So that's VCs, some family offices, angels, and some high net worth individuals. And that platform is both helping companies through that fundraising process and also giving them access to a broader range of investors. So if you're a business and you're embarking on your Series A, and you might already have a set of investors or some follow-on investors if you've done a previous round that want to contribute to the round, you can use Flow to both support that transaction. Thank you.
By the way, whilst you're adjusting to that, there's a magnificent comedy mic you've got there. Flow, because I saw a couple of people writing it down. Flow is F-L-O-W-W. It's two W's.
Yes, two W's, as all good fintechs have double letters.
What do we want? Another W.
Yes. And so that is really helping businesses in those earlier stages who've never done or have never done any real fundraising before, helping them through that process. So that's the first part at the kind of startup, early stage scale up space. In the middle, we've got something which we're really excited about, which you would have heard. It's been referenced in the press a lot. Jeremy Hunt's been talking about it. And it's something called Pisces, the acronym for which I have not committed to memory. But it is, because they keep changing the name of it. But it is the world's first genuine public and private crossover market. It doesn't exist yet. It's still being built. It will be launched. The regulatory framework for it will be launched at the end of this year. The market will come into fruition at the beginning of next year. And what this is going to do is enable private businesses to trade like a public business using public markets, pipes and plumbing for 1 day a month, 1 day a year, 1 day a quarter. And at the end of that trading window, go back to being a private business. And
that's very radical. Are there comparable structures in maybe New York or Frankfurt?
No. I mean, there are other private markets that exist, but this will be the first of this type and structure that will use genuine sort of public markets back end to be able to execute those transactions.
And when we mentioned about entrepreneurs seeing the world differently, it's also about seizing opportunities. So I'm going to seize this opportunity and suggest that you might like to come back EntreConf next year and tell us how Pisces has been going.
I would love
some
to
case
do
studies
that.
from here. You never know. Yeah.
I guess the other thing to talk about with Pisces that I think is really important is that what that is going to enable, aside from some secondary liquidity, if you're a business, you've been growing for 10 years, you might have taken on some angel or some VC at some point in your life cycle. What this is going to do is enable a partial exit or an exit for some of those earlier stage investors. It's going to enable you to take on some new investors, maybe some institutional investments. And it's going to enable you to go away and carry on growing your business. It is not a fundraising venue. You can't raise capital on Pisces. It is secondary liquidity only. But it's going to enable those earlier stage investors also to go back and do what they do best, to invest in startups, to invest in scale-ups. And so we're really hoping that it's going to help sort of reinvigorate that entire funding continuum, getting that startup and scale-up capital back to where it belongs, and enable those later stage companies to get on with running and growing the business.
Very good. We're going to throw it open to questions. If I can ask the team to grab the other mic so we can prepare. I'll just one other point on this. No, I won't do that at all. Let's throw it open. Any questions at all about any stage of flotations or fundraising? Actually, I will raise one other point. We're having a session a little bit later on employee ownership trusts with GS Verde, which is another route of getting liquidity to a founder, but that keeps it within the management team, of course. But we'll be exploring that shortly. Questions, please. Yeah, over here. That looks like Alex from Burgess-Salmon.
Yeah. Hi, Lauren. Thank you very much.
Hey.
It's just a quick one on Pisces. So you've got, we talked about how difficult it is to do an IPO and how much work's involved in it.
Yeah.
Could you talk a little bit about how much work will be involved in doing a secondary transaction on Pisces and whether we can keep it at a minimum to let startups and scale-ups and those people get on with running their business while trying to transact the secondaries?
Yeah. So firstly, IPO is difficult, but I would say a worthy endeavour. But thank you for that. On Pisces, look, we're still building this, right? And we are building it in consultation with the market and with private businesses. We've been speaking to them and the market for 2 years now. We've been pulling this together. And I think, this is a private market plus rather than a public market minus, if that makes sense. So it's really based on, private companies being able to easily utilize the platform. We're looking at things like disclosure, of course. There's not going to be a prospectus. It doesn't have the same kind of burden as it would do if they were listing on a public market, of course. So we've looked really carefully at all of those things and have been speaking with businesses of varying size and sorts and stages and founders from all different backgrounds and all different growth trajectories to really understand what is the problem and what's the problem we're trying to fix and make sure that we fix it in the right way. So yes, inevitably, if you were running a private secondary round, you would need to do some preparation for that. There will be a disclosure portal which will enable companies to make disclosures as you would to investors prior to that kind of transaction window. but I think the onus is very much on not asking too much extra of a private business that they wouldn't already have to hand, if that makes sense.
Great, thank you, Alex. Any more questions, please? Yes, in the middle, if we can get the mic over. Thank you. And I mean, each time, if you say your name and your company's name. Thank you.
Hi, Lauren. Thank you very much. I'm Michael Legg, Azurian Health. It seems to me that one of the biggest issues that London has compared with the US is the attitude of the pension funds. If you look at the US, they take more risk. I think some fantastic initiatives, but is there anything the London Stock Exchange can do to try and get pension funds to invest more in startups, scale-ups, tech companies? Because that will be make the biggest change, and that's what really needs to happen to get more liquidity into the sector.
Yeah, and we couldn't agree more with you. We've been sort of banging the drum about pension funds for the last couple of years. The Capital Markets Task Force, really rolls off the tongue, which I mentioned again earlier, is looking very carefully around pension reforms. We saw things like the Mansion House reforms, which was a commitment from a number of pension providers to put more capital into what they're referred to as unlisted businesses. So that's both private companies, but it also includes companies quoted on AIM, for example. So there's been a bit of commitment. There's been a lot of press coverage. We've even seen in the Labour manifesto, for example, commitment to try and encourage more pension funds to invest. So we are very much fronting the conversation around that, and as part of the Capital Markets Task Force, working out how we best support that. And Julia is very vocal on this subject. Interestingly, Pisces is potentially part of solving some of that problem, because assuming that we get pension funds on board with this is the right thing to be doing, we're not seeing enough UK pension funds investing in UK business. And look, just for comparison for everyone, the Ontario Teachers Fund in Canada invests more in the whole of the UK market, or in like 2 or 3 of the businesses in the UK market, than the whole of our pensions industry. And they're going great. They're doing really well. So, there's some real rationale here. And actually, if you compare us with other markets, the US, of course, but actually it's true of lots of other markets as well, the amount that our pension funds invest in our domestic markets is really pitiful. I think it's something like 4% now.
It's a great question from Michael, and I think it's the case that in the Ontario Fund's case, they're one of the biggest investors in Bristol Airport. And that, what?
Yeah, but they recognise real growth. Yeah, real growth.
Yeah.
So yes, we feel very passionately on that subject. Pisces, we're hoping actually, because it is public markets infrastructure and public markets pipes and plumbing, that actually it will enable some of those pension funds perhaps to use the market to do exactly that, to invest in some of those private businesses. So we're working really hard in that space, but a great question, and thank you.
Thank you. Over here, Nick Stubbs, this will be the last one we'll take, if that's okay. So Nick, we've got a session with Nick coming up tomorrow, I think it is, about ARC development, so ARC Global. So
Nick Stubbs of ARC Global.
Yeah.
Thank you, Lauren, for what you've said so far. I've just listening to you and about getting money back into the beginning of the stages, and talking about picking winners and taking risk. Looking at the Clifton Suspension Bridge, for example, and its history of funding. I mean, there were some very hairy moments in getting that across the line, but now we look at it as a success. Have you any thoughts on how you pick a winner?
Oh, that's
with reference to the Clifton Suspension Bridge specifically, but yeah, maybe not that.
Now, you said this Q&A was going to be easy.
Well,
goodness, that's not my job. I would be in trouble if I did, if I'm really honest.
Regulatory requirements are such that you have to be neutral. Blah,
Thank
blah, blah.
you.
Yes, exactly.
Yeah, I know that's really boring, and I know that's not really what you want to hear. I guess the political answer to that question
Keep going.
is, thank you, is, what investors...
Lauren, let me get you out of your trouble. You've actually answered my question in what you said, because my perception is that we've commoditized the funding process, and that really raw risk moment is quite rare, because we've done all the regulatory protections, and so you are able to say it's not my job, which is lovely, and you take a significant role in taking businesses forward, but it's learning that first scary moment to get us into the pipeline. That's I think you probably don't need to answer anymore. I've teased you enough.
I suspect LSE and scary moments are not synonymous. So
No, not at all.
Other investor routes are also available, Nick. Don't worry. I think we're going to close this session. I'd like to thank very much on your behalf Lauren Crawley-Moore from the London Stock Exchange. Thank you. Thank you.